Snipers, you have to see what's happening to the Bitcoin price this Saturday as we have a candle high of 44,555, just shy of our $44,800 target where we have this 200-day moving average. But notice how we have reclaimed the 20-week moving average for the first time since May 10th when this bear market started and we saw Bitcoin drop to 30,000. We are now testing home base. If we get above the 20-week moving average, we are back in a bullish trend and we could potentially start talking about new all-time highs for Bitcoin. But more importantly, we have to look at what's happening today to altcoins because Ethereum leading the pack much and above the 20-week moving average. Notice how we're seeing more strength in Bitcoin with a candle high of 31.71. That's no surprise for those that have been tuned into the Snipers channel over the last 3 months. There are a lot of moving parts today, and we really need to dissect them into bite-sized pieces for all of you snipers. And notice how with Ethereum showing strength, the Ethereum to Bitcoin chart is also heading towards our target here of this 86,000 Satoshi level, much and above the $65,000 level where we are expecting this to break out. And now we're starting to see the total cryptocurrency market cap chart react to this much and above the 200-day moving average, the monthly open and weekly open sitting at $1.6 trillion. But more importantly, the 20-week moving average, we are now above the 20-week moving average. The question is this the trick, trap, and frustrate crew coming on the weekend to show us some price action to the upside before pushing us to the downside? Because the DXY did close with a very bullish continuation candle. We need to talk about a lot of things today, snipers. So we'll look at others' dominance, Bitcoin dominance as well, and then quickly talk about traditional markets, what I'd like to see heading into tomorrow. But we're going to take advantage of this Saturday being that traditional markets are closed. And I'm actually going to discuss something that I don't typically talk about on our channel from one of my mentors in Elliott Wave analysis. I'm going to discuss this potential ABC correction that would take us to this golden pocket at 49,700 and potentially see one more push to the downside, because I need to address the bulls and the bears on this channel. And everyone was extremely bearish over the last few weeks, and as soon as Bitcoin starts to move up, now everyone is saying, oh, new all-time highs. So that's always going to be how market sentiment works. The question is, what are the charts telling us? And let's play it by the books. You guys are watching the Snipers channel. My name is Naeem Al-Abeidi. Smash the like button for the YouTube algorithm if you guys appreciate this content. And let's dive into this YouTube Bitcoin technical analysis with Bitcoin now testing this 200-day moving average. More importantly, testing the 20-week moving average. I talked about the potential that if we stair-step our way towards this 20-week moving average, there is a likelihood we could wick towards this $49,700 level, $49,700 US. And I still think that's on the table if Bitcoin maintains itself above 42,000 US dollars. We could expect 49,700 to come into play. But the question is, are we going to be seeing a rejection and possibly a retest of 42,000? If that happens, I think something like that is highly probable. And the problem with that is if we come back down to test 42,000, there's a potential we could break back into this range that would take us to 38,000. So that's why I want to address this Elliott Wave analysis by one of my mentors in Elliott Wave analysis. Shout out to Trade Devils for providing this chart. And one thing that they are really big on is understanding time frame. And so there is this potential ABC correction where we come up to this $49,700 level to then see another C wave take us back down towards this $24,000 level. That's kind of in line with the theory that we had on this channel. And what I really want you guys to notice here is there's a tool on TradingView that allows us to see time factored into the charts. And so if we go to this daily chart, I'm going to show you how to use this indicator because it is the weekend. We might as well talk about something a little bit more advanced. So if we pull up this indicator, let me go ahead and find it. So it's going to be called the, let's see here. It's going to be right under this, the fib speed resistance band. So if we take this high at 65,000 and we go to this potential low that we recently saw here on the 22nd of June, where Bitcoin tested the lowest level for this year at 28,000, what we're going to get is a approximate view of future support and resistance levels, just to keep it simple for you guys. And notice how we saw this bearish tail testing the 0.5, right? Because this uses Fibonacci, the 50% retracement, and that faked everyone out before popping into this lighter zone, seeing a consolidation, but now we're moving into this blue zone. And what's very interesting about this blue zone is now we're factoring time into the chart. We look back to 2019 where we had a death cross and very similar price action to what we're seeing right now. And if we actually do the same exact thing with this tool here, which I don't use often, but it is something that allows you to see a little bit of a better time frame when it comes to future prices. If we take this from the candle high from June 2019, where Bitcoin went to 14,000, down to where it came down to bottom around the 6.3K level, and yes, there was a further bottom eventually here in March 2020, but we could consider this abnormal. So I want to just keep this very, very clean and look at the high and low, just like we're looking at right now for price action. And notice how when we saw this low, we came up into this blue zone before seeing resistance and trending down. So this blue zone here is what I want you guys to pay attention to, because that's exactly where we're at right now. If we look at the same time factored into the current price action, we are now in this blue zone, right? So you can see this was the candle low, and just like last time, we came all the way up here. Now we're at this blue zone. The question is this going to fall apart at some point or another? I think that that's something we really need to monitor, and the only way to do that is to look at the smaller time frames, because everything morphs from the smaller time frames into the larger time frames. And so if you guys want me to cover more tools and indicators like that, I'd love to hear your thoughts in the comments below. But we go into the daily chart. We do have a lot of resistance here at this 200-day moving average, but because we're stair-stepping our way up here, I think that the potential likelihood of us seeing price action get to 49.7K is on the table. But we could also potentially just reject from the current price because of where we're at and how overextended this move to the upside is right now. So when it comes to the upside scenario, I don't think we'd see anything above 49.7K at least in the next 24 to 48 hours. But to 49.7K, I think in the next 24 to 48 hours, it's on the table. But let's talk about the downside potential, the support levels we need to watch, right? So we right now have this monthly open just below 41,950. So we know this is an important level. If we start to reject this 200-day moving average, where we're currently at 44,800, we also have the 20-week moving average, the first line of defense needs to come at 42,000 US dollars. If we see support here, there's that potential we could see continuation of the upside, more sideways price action. This would be the best case scenario, right? Maybe even this would be the best case scenario. But let's say this doesn't hold. Now we have the weekly open at 40,000. If this gets tested and we don't hold 40,000 and we break down, in my opinion, that is now my line in the sand. And think about this, snipers. We've been drawing our line in the sand and adjusting it because you have to be dynamic and be like water, right? Bruce Lee, be like water. And so remember, we had this $34,788 level. I said, if we get below that, that's my final draw. Then we finally saw the push to the upside, and I said, all right, now 38,000 is my final draw. Well, guess what? Now we've at least got our final draw a little bit higher. That decreases the risk now, right? So we get below 40,000. That's actually my final draw now. And we get below there, I think we could see one more push to the downside where that Elliott wave theory of this C wave coming into fruition, I think, becomes more valid. And that would take us towards the $26,000 to $24,000 level towards October to December of this year. So that's on the table. Now, all of this could change if this is a successful rescue operation. And the only way for that to happen at this point, because this weekly candle closes in 24 hours, we need the next weekly candle to get above the 20-week moving average and stay above the 20-week moving average at 44,800. So if we go to 49.7K and stay above 44,800, now we can talk about Bitcoin actually seeing new all-time highs potentially before the end of this year. And this is going to be an exciting conversation if we get to that. Now, that was a pretty in-depth analysis. I want to talk about altcoins, snipers, because it matters. We've been very bullish on Ethereum, despite many analysts saying that altcoin season is over. And we're obviously seeing not just liquidity flow in from US dollars, but also from Bitcoin. We'll look at the Bitcoin chart in a second. So regardless of what Bitcoin does, I think because Ethereum is still in this very large range, 34.54 is the next target. We get above 34.54, that would also assume Bitcoin is moving above 44,800. The likelihood of us seeing new all-time highs for Ethereum becomes highly likely. If Bitcoin rejects 44,800, we come back down to 42,000, we're seeing sideways price action, the likelihood of this breaking out is less likely, but it's on the table. Now, if Bitcoin breaks 42,000 and then breaks 40,000, the likelihood of this seeing lows, maybe even back down to 1980 to 1760 at some point, is on the table. We might not see any further yearly lows now that ETH 2.0 has come out because it's such a strong asset against Bitcoin right now. But there's a potential, there's a pullback, and that's what we want to monitor, right? If Bitcoin pulls back. So when we go into the Ethereum to Bitcoin chart, we can kind of determine the amount of fuel that's left on the chart for Ethereum. You know, this is really the amount of fuel in the tank here, because we have so much upside to 86,000 Satoshis that regardless of what Bitcoin does, that's why it's a possibility that even if Bitcoin goes sideways and just doesn't even move, Ethereum could still continue to the upside. But if Bitcoin sees weakness, that would make it a lot tougher. So we want to monitor 86,000 Satoshis. We break below 65,000 Satoshis, that's when I'd have concerns for altcoins. We will keep that on the table, but for now it's not. And let's look at the total market cap chart. Just like Bitcoin, we want to see this new weekly open get much and above the 20-week moving average if we want to assume a bullish trend. If we stay above this 20-week moving average, next week, these curtains are gone. No more red curtains, because that means we can start talking about potential new all-time highs, because you stay above home base, that's where you want to be in any trend. And so others dominance doing very well, still tightening up. So, you know, stay tuned for an update with others dominance and Bitcoin dominance. Not much has happened. We're still rejecting the 20-week moving average for Bitcoin dominance. So with traditional markets, I just quickly want to talk about what I'm watching as tomorrow opens up. Is the DXY going to push above this previous candle high at 93.181? Of course, we had the job numbers come out on Friday, and so there's a potential this could happen. This was unlikely for us to see this just push up out of nowhere, but it happened, and so this actually is not a good puzzle piece into this weekend. So are we going to see a bloody Sunday? That's on the table, guys. It's just the truth. We get to 49.7 thousand though, and we see a bloody Sunday down to 44,800. I'm cool with that. So S&P 500 still sideways price action. Commodities like U.S. oil and gold not giving us much hint, but we did see a quick sharp sell-off on Friday after what the DXY did. So that's why this bloody Sunday is still on the table for Bitcoin. And with that, I hope you guys enjoyed today's analysis. I appreciate each and every one of you guys. I certainly enjoy doing this. I want to give away one of my favorite books on value investing to one of you watching the videos, Principles by Ray Dalio. If you want to win this, just comment anything in the comment section and you'll have a chance to win. Remember to smash the like button so that we can dominate the YouTube algorithm and hit 100,000 subscribers on this channel. Vishal says, weekend price action, always juicy. Looking forward to it. Send me a message on Instagram. You want a book. And with that, thank you all for tuning in today. My voice is going out. And until next time, snipers